All right, friends, so let's continue our discussion. We were discussing capital gains. Okay, let's finish off capital gains and let's move on. We have completed slum sale. Now, keep quiet and listen. There is another provision called as section 50C and section 51. These are the two sections that I'm planning to cover in capital gains. So these are the two sections that we have to claim in. We have to complete in capital gains. So let's complete that too. Okay, listen, 50C is pretty simple. We can finish off 50C in 2 minutes. Okay, keep quiet and listen. Online friends, I hope I'm audible. Okay, voice break. Is there any problem with my voice? Online friends, please respond. Am I audible? Am I audible? Audible. Yes. Superb. So listen, friends, what section 50C says. Keep quiet. Imagine you are selling a land or a building or a land and building. You are selling what? Either a land or a building or a land and building. And your stamp duty value is say 1 crore 15 lakh. How much is the stamp duty value of the land you are selling? 1 crore 15 lakh. Your actual consideration is say 1 crore. And how much is your actual consideration? How much is your actual consideration? 1 crore. Now imagine you are selling a land or a building or whatever it is for a value which is less than the stamp duty value. Income tax department will come and say not acceptable. If you are selling something for a value which is less than the stamp duty value shall be deemed to be the full value consideration. Are you all listening? If you are selling an asset for a value which is lesser than the stamp duty value, then department will come and say stamp duty value shall be deemed to be the full value consideration. Are you all with me? This is what is called as section 50C, and we will read the heading. And what is the heading? Special provision for full value consideration in certain cases. What is the first sentence? Asset being land or a building or both held as capital asset. If the stamp duty value should be more than 110% of actual consideration. In the example, how much was the actual consideration? In the example, how much was the actual consideration? 1 crore. How much is 110% of 1 crore? How much is 110% of 1 crore? 1 crore 10 lakh. And how much is your stamp duty value? 1 crore 15 lakh. Is the stamp duty value more than 110% of actual consideration? Yes. Stamp duty value is more than 110% of actual consideration. And hence, you have to say that stamp duty value shall be the full value consideration. Are you with me? Now, let me make a small change in the example. Say instead of 1 crore 15 lakh, say it is 1 crore 9 lakh. Say stamp duty value is 1 crore 9 lakh. And now actual consideration is 1 crore. Now you tell me whether stamp duty value is more than 110% of actual consideration. No. Stamp duty value is more, but it is not more than 110% of actual consideration. Hence, in this case, you have to show only that actual consideration as the full value consideration. For section 50C to come into picture, SDV have to be more, and it have to be more than 110% of actual consideration. Then only 50C will be applicable. Otherwise, 50C will not be applicable. Are you with me? Are you with me? Then, stamp duty value shall be deemed to be the consideration. Now, there is a note. If the stamp duty value does not exceed 110% of the consideration received or accruing, then such consideration shall be deemed to be the full value consideration. That means, if it does not exceed 110, then the actual consideration itself will be the full value consideration for the purpose of computing capital gain. I hope that point is clear. Is that point clear? Is that point clear? Superb. Now, friends, moving on with the next point under this particular section. Listen. Say for example, In 2023 April, say 15th April 2023, I've entered into an agreement to purchase an building. To purchase what? A building. Normally when you buy immobile property, there will be always a agreement initially. Alright. Thereafter, the registration happened on September 2023. On September 2023 only registration happened. Are you all listening? So you entered an agreement to purchase a particular building on when? On 15th April 2023. But registration happened only on September 2023. You got registered or you registered that particular thing. That means the actual transaction happened in September 2023. Say actual consideration was 1 crore. Actual consideration was 1 crore. But stamp duty value as on date of agreement was say 1 crore 20 lakh. Stamp duty value as on date of agreement is how much? 1 crore 20 lakh. And stamp duty value as on date of transfer is say, or date of registration is say 1 crore 30 lakh. There is an increase in the stamp duty value. There is an increase in the stamp duty value. Now the question is, which stamp duty value you have to take for the purpose of 50C? There are two stamp duty values. Which one you have to consider? Either the date of agreement or date of registration. Date of agreement subjected to one condition. What is that condition? There should be an advance received by the seller from the buyer. The buyer have to pay an advance to the seller, and the mode of advance have to be either account pay check or account pay bank draft or or electronic clearance system or prescribed electronic modes. Listen, not other than cash. Right now it is account pay check, account pay bank draft, electronic clearance system or prescribed electronic mode. In any other mode, not acceptable. Are you with me? So that point what they are saying is, if there are two stamp duty values, one in date of agreement and one on date of registration, and on date of agreement, if you have received a advance by way of either account pay check or account pay bank draft or ECS or prescribed electronic modes, then you can take the stamp duty value as on date of agreement. In all other cases, you have to take the stamp duty value as on date of registration. That means you are not receiving an advance or receiving an advance but in any other mode, you have to take the stamp duty value as on date of registration. The stamp duty value will only go up. It will never come down. It's just like rocket. Okay, it will only go up, will not come down. Are you with me? Are you with me? Government will not reduce the stamp duty value. Once fixed, it is fixed forever. Then they may increase the stamp duty value. So reverse situation will not come. And nobody will enter an agreement after the registration. Nobody will. Once registration is over, then everything is over. Then there is no need of any agreement. What's the purpose of agreement? We will just like booking. We will book that by giving an advance. Then we will say to the seller, you wait, let me arrange the money, because huge money is involved in purchasing building and land. So normally date of agreement will be the first. Thereafter date of registration will come. Are you with me? Are you with me? Yes. This is what the department say. Yes. Sir, we have a stamp duty value that is 1.1 crore and consideration 1 crore, the same as treated as 50C. No. That is stamp duty value as on 1st April 2001. This is stamp duty value as on date of sale. Ragul, both are different. Stamp duty value will always vary, okay? Stamp duty value will always vary. That is different, this is different. That is for the purpose of cost of acquisition, this is for the purpose of full value consideration. Yes. Are you all with me? Are you all with me? Stamp duty value goes up, then people goes to up. You are saying people will die? That's what you are saying? Yeah. So listen, coming back to the point, whether people go up or down, you have to qualify in September. That's it. Okay. Whatever happened, left or right, we will say east or west, you are the best, like that. East or west, you have to qualify in September. That's it. Okay. You don't have any other choice. Don't even think about anything else. There should be only one thing in your mind. Qualify. And there is a thing is that there is another magic will happen. If you think every time about qualifying your exam, you will automatically study. Okay, if you study like that, you will automatically qualify. Trust me on this. Trust me on this. You think about studies qualifying only, automatically that pressure will come. Automatically you yourself will study. You don't require any motivation. Are you with me? This external motivation only will have an effect of 10 to 20 minutes. Say I'm saying a motivating story, you will get, yes sir, today evening we'll rock. After half an hour, yes sir. It will be like that only. Whatever the motivating story I'm saying, that you will be like, at that time you will be fire. From today onwards, I'm about to study for 23.5 hours and all, you will say, in a day. But what will happen? Even for half an hour, you will not study. Very next day, and the motivation story, ella chumma fake story tha. There is no thing in that. You will give excuses to yourself. Okay. So the motivation have to come from inside. It should be self-motivation. For that one thing, dream about qualifying. Always don't dream about qualifying, okay? Just dreaming about qualifying. It's not like that. Always think about qualifying. Automatically that pressure will come. That will actually help you to sit more time in front of your book, okay? Yes. See you in final classes soon. Yes, that's what my expectation. Qualify your inter and let's catch up in final. Final is fun. Okay. Inter is like I cannot go beyond certain extent in inter. But final it is fun because we can mix up practical things. Okay. Inter, if I mix up practical things, then topic will never get over. And it is unnecessary also. Inter na chumma onnume illa adile. Final, when it comes to final, definitely there are a lot of things. Income tax will become more interesting as well as more dry. Yes. For people who don't like income tax, final will be like very dry. People who have that interest in income tax, final will be like super interesting because our syllabus is that superb. And the questions we have, you saw my final video. I studied from my final video for CMA Inter. Yes. She already have, because that have a kind of, you can mix up a lot of things. And will be like one paragraph we will be interpreting in different ways. So that is fun. How to maintain consistency? Very simple. See, I can give you one tip to maintain consistency, okay? See, whenever you sit and study, take one piece of paper. Okay, take one piece of paper and you always try to write the type. Say for example, tomorrow morning you wake up at 6 o'clock. Okay, 6:30 you started your studies. Okay. 6:30 you write the starting time. Then say 8:30 you are having your breakfast. So 2 hours. You need to write down 2 hours. And during that time, never touch your mobile phone. That is rule number 1. Never touch your mobile phone when you are started. 6:30 you go, sit on your table, take mobile phone, surf for 5 to 10 minutes. Then you put your mobile phone away and start the time, 6:40. 10 minutes mobile phone you have used, 6:40 you write. Then at 8:40 you have to set a target, 2 hours. After 2 hours, maybe after 1 hour or 1.5 hours, you will get tired and you will feel hungry. Maybe 1.5 hours, you write that 1.5 hours. Do that. And during the year, at the night or in the evening, you check how many hours you have studied. Interesting factor will be either 5 or less than 5. Then you will have that pressure. You will feel that pressure because I'm not studying enough. You may be sitting, but you are not studying. You may be sitting in front of the table. Your time will be like 6 o'clock, I'll sit on the table. You will sit and half an hour you use mobile phone. And after the end of the day, you will say, from morning 6 o'clock onwards, I'm studying. Oh, you pavam me. I need some rest. You will think like that. No, don't do that. So whenever you are writing the time, whenever you have written that start time, keep away from your mobile phone. So you will understand that you will realize that you are not studying for at least 5 hours a day. I'm talking about a full free day. Are you with me? Second day, automatically, you will feel like I have to sit more. You get that. Once you get that momentum, then it will be with you. See, our brain have a problem. It's totally addicted to the habits. Our brain is totally addicted to habits. Let me give you one example. How many of you normally have a bed coffee? How many of you normally have a bed coffee? Nobody. Okay, forget about that. How many of you normally brush before your bed? How many of you normally have a brush before your bed? Okay, few are there. How many of you brush in the morning? Day. Okay, hands down. One day, tomorrow, you do one thing. Without brushing, you go out. What will happen? Tomorrow, without brushing, you go out. What will happen? You will feel like something is sticking on to your teeth. You will feel totally, you will not feel that confidence to talk. Yes or no? You will do like this. Yes or no? You will feel like some stain is there in your teeth. You will feel that, you will not feel that confidence. Are you with me? Are you with me? Every time you will get irritated. Are you all here? See, if you have the habit of having coffee, every day if you're having a coffee at a particular time, one day you skip that, what will happen? You will feel a headache. Headache will come. I should have that coffee. Today I missed my coffee, so it's a bad day for me. These kinds of thoughts will come because the brain will what? Give us stimulus. I didn't get coffee. Hello. And every day if you're brushing your teeth, the brain will say, hello, you haven't brushed your teeth. Okay, it's full of germs. Your teeth is full of germs and stains. Okay, be careful. Don't talk to people. You smell bad. You don't even know what's that smell. Other people may feel that, but your brain will say, you are smelling bad. Whenever that thought comes, you will feel irritated. Are you with me? Like that, all of a sudden, you go in front of your book, sit, try to study, your brain will say, hello, what is this? இதெல்லாம் எனக்கு பழக்கமே இல்லை. You are forcing me to study. Day, Indian 3 வந்திருக்கு. Okay, let's go and watch Indian 3. Day, வந்து reel வந்திருக்கு. In Instagram, there is a new reel. Go check it. Take your WhatsApp and send some messages. The signals will come. And you will have a headache. You will not be able to sit. You will feel like, oh, I'm not able to sit. Are you with me? Sit forcefully at that time. Don't hear this. Sit forcefully. During that day, most of the people will give an excuse that I'm not productive that day. That is the excuse. It's called as escapism. I'm not productive that day. Anyways, even if I sit or not, I'm not studying. So let's enjoy that day. We'll study from tomorrow onwards. Don't do that. It's not productive. It will not be productive, but you have to sit because you're training your brain. There's a concept called train your brain. There's a book called Transactional Analysis. It gives an overview of the analysis of the human brain. Okay, our brain have these kinds of problems. If it is not addicted, you have to sit and make him understand that for the next 2 months, you will be like this. You have to sit. For one day, you will not be able to. You will feel that tiredness. You'll get bored. It will be like you will get this kind of, you'll go mad, headache will come, but forcefully sit. Next day also forcefully sit. Third day onwards, you will get that momentum. Third day or fourth day onwards, you will get that momentum. Once you are in that momentum, never go back. Don't watch movies in between. Don't go for parties and all. Why? Because once your brain gets free again, because you don't have that much time in between. You can take small breaks. You can just go out, have some food, have some coffee, talk to your friends, coming back. Don't watch movies because that movie have hangover effect. That movie will have a hangover effect. The very next day you go, sit in front of your book, that movie song will come. Say you have watched the Nayanthara movie, then very next day if you open DT will not come, Nayanthara only will come. Are you with me? So once you got that momentum, never go back. This will definitely give you a better consistency. If you consistently study, definitely you will get result. Are you all here? I hope I have addressed your concern. Rangan Cheta Maso, you calling me Rangan Cheta na? Okay. I'll cut you, okay. Yeah. But didn't study, brain didn't said, sir, tell to use phone. That's the problem. Okay. Got September 5. Day. God means Vijay movie. Vijay will be there only, okay. Vijay will be there only. After September 20th also, God will be there in the theaters. Subjected to condition, okay. Yes. Any limit for advance, sir? No limit for advance. Irrespective of the amount of advance, this provision will be applicable. So let's come back to the next provision under... Let's come back to the next provision under section 51, that is advance money received and forfeited. Please listen. Say for example, I have a property. I have what? A property. Are you all listening? Yes, keep quiet and listen. Say, I have a property I've told that I'll sell that property. Okay. I told to the people that, or I told to the public that I'm ready to sell my property, and one buyer came to me and he has given me an advance. But due to some events, that sale didn't happen. That sale didn't happen. And I forfeited the advance. What do you mean by forfeiting advance? The buyer have given me an advance. In our agreement, I have clearly written that if this transaction is not completing, I have no plans to give you this advance back. So I can legally forfeit that particular advance. Are you with me? If I'm forfeiting an advance, then you tell me what to do. What is the treatment in income tax if you are forfeiting an advance? So what department say? You need to check the date of forfeiture. You need to check what? Check the date of forfeiture. The treatment of advance money forfeited on or after 1st April 2014. That simply means if you are forfeiting an advance which is received in relation to transfer of an immobile property, and the date of forfeiture is on or after 1st April 2014, then what to do? Such sum shall be chargeable to tax, income tax, under the head IFOS under section 56 subsection 2 clause number 9. Very simple. Today I have received an advance and I forfeited that advance. You tell me what to do. Today means 24-25. In the year 24-25, that forfeited amount have to be a income taxable under IFOS. Are you with me? Because this provision came to the income tax with effect from 1st April 2014. Now, I know that you have a question. What is that question? What if the forfeiture is before 1st April 2014? Let's understand what is the treatment if there is a forfeiture before 1st April 2014. You tell me what's the treatment? Such advance shall be deducted from the cost of acquisition on subsequent transfer of asset. If the forfeiture happens before 1st April 2014, you have to adjust that particular advance with the cost of acquisition of that asset. I'll give you an example, okay? Listen. I have purchased an asset on say 1st April 2001, say for 10 lakh. And forfeited an advance on 2010-2011, that is rupees 1 lakh. I received 1 lakh and forfeited that particular advance. Then in 2023-24, I sold the property for 50 lakhs. I sold that particular property for what value? 50 lakh. How do you compute the capital gain? How much is the full value consideration? That means the year of sale is 2023-24. And how much is the full value consideration? 50 lakhs. Full value consideration is 50 lakh. Forget about direct expenses, okay? We will jump into cost of acquisition. You tell me what is the original cost of acquisition? 10 lakhs is the original cost of acquisition, but there is a forfeiture of advance and that forfeiture is before 1st April 2014. So what do you need to do? You need to adjust that forfeited advance with the cost of acquisition whenever you are selling that particular asset. Are you with me? You need to adjust that forfeited advance with the cost of acquisition whenever you are selling that particular asset. So that simply means how much is the advance amount? That is rupees 1 lakh. You need to adjust this 1 lakh and your cost of acquisition will be 9 lakh. Only this 9 lakh is subjected to indexation. Even though forfeiture happened in 2010-11, you have to adjust that forfeiture value or forfeiture advance with the original cost of acquisition. Only the remaining value have to be indexed from 2001-2002. Are you with me? So how much is 9 lakh into 348 divided by 100? Come again? 31 lakh 32,000. So that will be the cost of acquisition. And how much will be the taxable long-term capital gain? 18 lakh 68,000 shall be the taxable long-term capital gain. Are you all with me? Are you all with me? This is the treatment of forfeited advance if the forfeiture is before 1st April 2014. But there is a problem in this. What is the problem? Say for example, have you understood this example? Have you understood this example? Now, listen. Say, Mr. Father is there Mr. Father purchased this asset in 2001 for 10 lakh. And there is a forfeiture in 2010, 11 by Mr. Father. And in 2018, say in the financial year 2018-19, Father transferred this property to son. Father transferred this property to who? Son. Now it is son who sold that particular property outside. Now it is the son who son is the one who sold that particular property outside. So you have to compute the capital gain in the hands of son. Yes or no? Now you tell me full value consideration will be 50 lakh. Now you tell me, is the son have forfeited any advance? The son having forfeited any advance, only his predecessor forfeited that advance. Yes or no? For that, son is not required to adjust anything. Because in the case of son, when you compute the cost of acquisition, your cost of acquisition will be the 10 lakh itself. Are you with me? If the advance is forfeited by the predecessor, it is not adjusted with the cost of acquisition of successor. So it's actually a loophole. Because if the predecessor forfeits that particular advance, he can transfer that asset in the name of son and he can make that asset sell by transferring it in the name of his son. That's why on 1st April 2014, they have introduced the new law. Whenever there is a forfeiture, you tax that under IFOS in the year of forfeiture itself. Have you understood? Have you understood what I said? So this have to be there because in examination, they may test any of this, okay? They may test any of this. So the treatment is very simple. You check the date of forfeiture. If it is before 1st April 2014, then what to do? What to do? Advance have to be adjusted with the cost of acquisition. If the forfeiture is after 1st April 2014, then what to do? The year of forfeiture itself, you have to tax it under IFOS. That's it. Moving on with the next one. Where we were discussing capital gains. Now we have the rate chart. And now one more thing is there. There are certain exemptions for capital gains. Yeah. Come again? Yes. Because other cases that will be a proper transfer by the father. If a father is selling outside, then father is a transferor. If he is gifting, he is not a transferor. If he is selling outside, the father will become a transferor and he have to compute the capital gain. While computing capital gain, it's the father only have forfeited that advance. So you have to adjust it with the cost of acquisition. Got it? Come again? Yeah. So, listen friends, in capital gain, there are a few more topics like 54, 54B, 54D, 54F, then 54EC. Okay, so listen, 54 is actually, I'll tell what exactly is this. You have to study this, okay? I'm not covering this in detail. I will say what is what. Are you all with me? Are you all with me? In case of free gift, okay, 1 second. In case of free or gift, how to treat? Gift is not treated as a taxable transfer if it is between relatives. Other gifts are taxable under IFOS that we will study next. Okay. If the gifts are, if there is a gift between relatives, then it is not subjected to any taxes. It's not regarded as a transfer as well. If you are gifting something to someone else, a third party or something, that will be there are certain impact under IFOS that we will study under IFOS, okay? Don't worry. So listen friends, there are certain exemptions. So please keep quiet. There are certain exemptions that we have to study. So please listen and please don't talk. 54, what exactly department says? Say you have land or say you have a house property. Say you have what? A house property. You are selling that particular house property. You are selling that particular house property and you are buying a new house property. Are you all with me? You have a house property and you are selling that particular house property and you are buying a new house property. If you're doing this, when you're selling a house property, you have to compute the long-term capital gain. You can claim an exemption from the long-term capital gain if you buy a new house property. That means you sell a property and buy a property, you will get an exemption under section 54. 4. I'm not covering it in detail, but you have to study it in your exams. Are you with me? What is 54B? You have a urban agriculture land. You have what? An urban agriculture land. And you are selling an urban agriculture land and buying urban or rural agriculture land. You will get an exemption under 54B. What is 54D? You have an industrial undertaking. It has been compulsorily acquired by the government. You have an industrial undertaking and compulsorily acquired by the government. And you are making use of that compensation to buy another industrial and not another industrial undertaking. You are making use of that compensation to buy another land or building to continue your industrial undertaking. Are you with me? Say CA+B Academy's buildings are taken over by the state government for constructing a flyover. So the state government have to pay a compensation to the CA+B Academy. CA+B Academy is making use of that compensation to purchase another building to continue their academy. That amount invested in the another building is allowed as a exemption. Then what is 54F? You are selling some gold and buying a house property. From the capital gain on account of sales of gold, if you invest that in a house property, you will get an exemption under 54F. And what is 54EZ? You are selling either land or a building or a land and building. And the long-term capital gain you have invested in 5-year NHAI or 5-year RECL or 5-year notified bond, you will get an exemption up to 50 lakh. This you have to study. I've just summarized it. Are you with me? Because for examination, this is actually required, but because explaining this in detail itself will take at least 2-3 hours. I'm not investing that much time because we have to finish IFOS and 115 BAC is pending, and I want to make you solve a lengthy question which covers all the heads. Are you with me? All right. Advance received and forfeited, explain again. My God, don't make me repeat like this. The topic will not get over. Check the date. Okay. If the advance received and forfeited before 1st April 2014, adjust it with the cost of acquisition. If it is on or after 1st April 2014, the year of forfeiture itself, you treat it as an income taxable under IFOS. That's it. Moving on. Now we will start our discussion under IFOS. Again, I'm not covering all the items under IFOS. I'm only covering selected items under IFOS. Are you all with me? So let's understand which all are the selected items under IFOS. Now, listen. We are about to start the first thing, that is casual income under IFOS. You tell me, what do you mean by casual income? Casual income. Income like lottery, card game, income from other game of any sort other than online. Other than online game. Because for online game, we have a separate provision called 115 BBJ, winnings from online games. Are you with me? Are you with me? So lottery income, card game, income from other game of any sort. Then income from crossword puzzles, winnings from horse races, etc. will be subjected to 115 BB. And what is the rate of tax? 30% plus surcharge if any plus cess. There is a flat rate, that is 30%. Are you all listening? Say for example, I participated in Big Boss and I won 1 crore rupees. I'm the Big Boss winner this season. Okay, we won 1 crore rupees. Are you all with me? If I'm winning that 1 crore rupees, then that 1 crore rupees will be subjected to tax under 115 B. And what is the rate of tax? 30% shall be the rate of tax. Are you with me? Because we call these kinds of incomes as what? Casual income. Say, or I took a lottery. In Tamil Nadu, lottery is banned. Say I took a lottery from Kerala. And I won 1 crore rupees, the first prize. So whatever amount that I'm winning will be subjected to 115 BB. And what is the rate of tax? 30%. Are you all with me? Now, while computing this casual income, there are certain things that you should know. While computing this casual income, you have to be careful with certain things, and that's what we are about to cover. And what is the first thing? No expense allowed. What is that? What do you mean by no expense allowed? You cannot claim any expenditure as a deduction. All the incomes are subjected to flat rate 30%. Number 2, no chapter 6A deduction. You cannot claim any chapter 6A deduction from the casual income. Number 3, no adjustment of unexhausted basic exemption limit. If you have unexhausted basic exemption limit, you cannot adjust that with the Casual income. So no expenditure is allowed as deduction, no chapter 6A reduction, and no adjustment of any unexhausted basic exemption limit. It is subjected to flat rate 30%. The entire gross winnings will be subjected to 30% rate of tax without any expenditure, any deduction, any other adjustment. Are you with me? Are you with me? Say for participating in Big Boss, I have appointed a PR team. Okay, a PR team, and they will keep on posting every day. They will keep on posting something related to me in the social media. Come again? And that's it. So they keep on posting every day in social media something related to me. In that case, I'm incurring an expenditure, but I cannot claim that expenditure as a deduction. Not possible, because the entire game is subjected to, entire winning is subjected to what rate? 30% rate of tax without subjected to any other deduction. Is that clear? Is that clear? If advance received after 1st April 14, will it be charged under IFOS? Yes. If it is received before 14, reduced from the cost? Yes. That's right. That's right, Ali. Yeah. So, listen. What if you are winning some online game? Say you have played some online game and you have some winnings. Okay, what to do? You cannot claim any rebate. No expenditure, no deduction, including rebate. Not possible. You tell me, what if you are winning some online games? You tell me, what's the treatment? Say, for example, Dream 11 or Fantasy Cricket or Rummy Circle or Gently Rummy or 8 to 3 something, 8 to Ace to 3 Rummy. So those kinds of game you are playing. Are you with me? Are you with me? So you're playing some game and you want some amount, then what will happen? It will be subjected to what rate? 30% rate. Subjected to surcharge if any plus cess. In while computing that also, you cannot claim any expenditure as a deduction, no chapter 6A reduction, no unexhausted basic exemption limit as well. And there's a definition for the online game that you know very well. What is the definition for online game? A game that is offered on the internet and is accessible by a user through a computer resource, including any telecommunication device. I know that you will teach them the definition for online game. Okay. They don't have to teach you the definition of online games. You better know it. So, what the department say? If you are getting some winnings from online games, that winnings will be subjected to what rate? 115 BBJ at 30% rate of tax, and that winning is not subjected to any deduction, including basic exemption limit. You will not get it. Are you all here? No expenditure, no chapter 6A, no adjustment for unexhausted basic exemption limit. Yes. Now we will cover one more thing under IFOS. That is the most important thing. This is the most important thing under IFOS. That is taxation of gifts. Are you all listening? Are you all listening? Give me a second. Give me a second. Yes. Now listen. Now we are about to discuss another important topic in the income tax law. That is taxation of gifts. Listen. Keep quiet and listen. Any sum of money. Let's read the heading. Okay. Section 56, subsection 2, clause number 10. Any sum of money or value of property received without consideration. Keep quiet. Or inadequate consideration to be subjected to tax in the hands of the recipient. Very simple. Say for example, you're receiving certain items mentioned under section 56. Either without consideration. What is without consideration? Free of cost. Or for inadequate consideration. What do you mean by inadequate consideration? You are paying some consideration, but that consideration is way too less. In such scenario, the recipient, whoever gets that particular asset, is getting a benefit. That benefit have to be valued and you have to pay the taxes for that benefit. Are you with me? Say some people, okay, or my friend have gifted me a house. I'm getting a benefit. What is that benefit? Value of house. So that value of house will be taxable in my hands under 56 subsection 2 clause number 10. And that's what we are about to discuss. So taxation of the gifts in the hands of recipient. Are you with me? So let's understand what exactly is this. So can you read the first box? When any person receives in any previous year any sum of money without consideration, and if aggregate value of money exceeds 50,000, then whole of the amount is taxable. Are you all with me? Are you all listening? So we will take one example for completing this. Here, what's your name? Red shirt. Can you tell me your name? Dinesh. So Dinesh, thank God you are not Hari. Okay. Yes. So Dinesh, one fine day, is walking through the street. Okay. Dinesh, one fine day, walking through the street. He was simply having a walking. Okay. And what's your name? Next one to Dinesh. Madhav. Okay. So Madhav met Dinesh. Madhav met Dinesh and Madhav paid him 80,000 rupees. Simply. No reason. Madhav, when he met Dinesh, paid how much? 80,000 rupees to Dinesh. And Madhav and Dinesh have no connection at all. They are not relatives and all. Simply they paid 80,000 rupees. Are you with me? So if Dinesh is getting this 80,000 rupees without any consideration, because Dinesh don't have to give anything back. Are you all with me? In such case, this 80,000 will be taxable in the hands of Dinesh under which head? Under IFOS under section 56, subsection 2, clause 10. Are you all with me? So what tax says is if any person in a financial year is getting a money without consideration and the value of money in aggregate received by Dinesh is how much? More than 50,000. Then entire money received by Dinesh shall be fully taxable and Dinesh have to pay taxes for that 50. Are you with me? Say Madhav instead of 80 have paid 45,000. Madhav instead of 80 have paid how much? 45,000. Then you tell me what is the impact? No tax impact. Because IFOS taxability will come into the picture only if the value of money exceeds 50,000. Are you with me? Say Madhav. And what's your name? Next one. The one with specs. Yeah. Jay. Say Jay have given another 40,000. Jay have given another say 45,000 to Dinesh. So Madhav have given 45,000 and Jay also have given 45,000. Then you tell me what is the impact. Everything is happening in 23-24. Okay. Everything is happening in between 23-24. Then you tell me what will happen. In aggregate, the amount is how much? 90,000. In aggregate, the amount is 90 and it is more than 50 and this full 90 is taxable. 50,000 is not a deduction. It's a threshold. Once the gift exceeds threshold, that entire value of gift shall be fully taxable. You cannot deduct 50 from that. Are you with me? 50 is actually a threshold. Once the gift goes above threshold, then it shall be fully taxable in the hands of recipient. Are you all with me? Are you all with me? Will this apply to earnings from online games too? What is the connection between earnings from online games and this? This is gift. Okay, that is under 115 BBJ. Yeah. So friends, listen. So we will read that particular point again. So can you read this point again? If aggregate value of money exceeds 50,000, then whole amount is taxable. It is not necessary that this 50,000 have to be from one person. In a year, if Dinesh receives in aggregate more than 50,000, full amount will be taxable under IFOS. Whether it is from one person or a different person, you have to always take the aggregate in a financial year. Is that point clear? That's why we have started with any PY. In any PY, any sum of money without consideration, and if the aggregate value of money exceeds 50, then the whole amount is taxable, not the excess. Whole amount will be taxable. Are you all with me? Are you all with me? Moving on with the next item. What is the next item? Immovable property being land, building or both without consideration. And the stamp duty value of such property if exceeds 50,000, then whole of such amount would be taxable. What do you mean by this? Say Dinesh continued his walking. Okay, he continued his walking and he met next. What's your name? Next one. Srikanth, SK. Say he met SK. Whenever he met SK, SK transferred his house property to Dinesh. Okay, SK what? Transferred his house property to Dinesh. And this transfer, the stamp duty value of the house property, say it is 10 lakh. So SK met Dinesh. SK and Dinesh have no connection. Okay, who's SK? Somebody. Who's Dinesh? Someone else. So when they met, they have given what? A consideration. Or say SK and Dinesh are friends. Irrespective of their connection, their relationship, if any person is giving an immovable property to another person, the person who receives the immovable property have to check one thing. What is that one thing that you have to check? Whether the stamp duty value of that immovable property is exceeding 50,000. If the answer is yes, then what will be the impact? The full 10 lakh shall be taxable in the hands of Dinesh under IFOS. Under section 56 subsection 2 clause number 10. Are you with me? Are you with me? So this is another thing here is this is per property, not aggregate. What is per property? Say SK have transferred a property and the stamp duty value is 45,000. And SRK also met. SRK also came over there. Okay, SRK, Shah Rukh Khan visited Dinesh. He saw Dinesh and given another property and the stamp duty value is say 45,000. So how much is the total value of property received by Dinesh? 90, but no problem, not taxable because in the case of immovable property, it is per property, not the aggregate. Are you with me? Are you with me? So read this again. Where any person receives in any previous year immovable property being land or a building or both without consideration, stamp duty value of such property if exceeds 50,000, then whole of such value would be taxable. They are not saying aggregate over here. That does mean it is per property. Are you all with me? You don't have to worry about the aggregate point over here because when it comes to the immovable property, it is always per property. That is possibility number 1. And there is one more possibility. What is that? Where any person receives in any previous year immovable property being land, building or both for inadequate consideration. What do you mean by inadequate consideration? Listen, inadequate consideration means, say, Dinesh got a house. Dinesh got a house property and its stamp duty value was say 1 crore or 1 crore 20 lakh. 1 crore 20 lakh is the stamp duty value of the property received by Dinesh. Are you with me? Are you with me? Mr. A have given his property to Dinesh and it is actually for 1 crore stamp duty value of the property was 1 crore 20 lakh and Mr. A collected 1 crore from Dinesh. Mr. A collected how much? 1 crore rupees from Dinesh. Are you with me? Imagine from the perspective of Dinesh. What was the stamp duty value of the property? What is the stamp duty value of the property? 1 crore 20 lakhs. What is the consideration paid by Dinesh? What is the consideration paid by Dinesh? 1 crore. So what is the benefit received by Dinesh? How much is the benefit received by Dinesh? Benefit received by Dinesh is 20 lakhs. Or we can say difference between stamp duty value and actual consideration is how much? 20 lakhs. So what department say? If it is for inadequate consideration, stamp duty value if more than both 50,000 and 110 percentage of actual consideration, then difference between stamp duty value and actual consideration is taxable. Two things you have to satisfy. First, you need to check whether the difference amount is how much? First, you need to check whether the difference amount is how much? That means for inadequate consideration, stamp duty value, if more than both 50,000 and 110% of actual consideration. We'll do one thing, we'll rewrite this, okay? There is a small error in this paragraph. We will rewrite this. So I want all of you to make a note over here. We will rewrite that. Listen, two things you have to check. Before rewriting, let me complete the example. Two things you have to check. Keep quiet. Keep quiet and listen. So, two things you have to check over there. Which are the two things that you have to check? Number one, how much is the difference amount? The difference amount, difference mean what difference? Stamp duty value minus actual consideration. It should be more than 50,000. That is condition number one. And what is condition number two? Stamp duty value have to be more than 110% of actual consideration. If you are satisfying these two, then what is the impact? Entire difference amount shall be taxable in the hands of recipient. Are you all with me? Are you all with me? So instead of that table, write it like this. Difference amount, that is SDV minus actual consideration should be more than 50,000 plus SDV should be more than 110% of actual consideration if both are satisfied. If both are satisfied, then what will happen? Difference amount shall be taxable under IFOS under section 56 subsection 2 clause number 10. Are you with me? If you are satisfying both, that means difference amount should be more than 50,000 plus your stamp duty value should be more than 10% of actual consideration. If both are getting satisfied, then the difference amount will be fully taxable in the hands of recipient. Let's check in this example. What is the difference amount? Stamp duty value of the property was 1 crore 20 and the actual consideration is 20 lakh. How much is the difference amount? How much is the difference amount? 20 lakh. So that is definitely more than 50,000. And let's check stamp duty value. How much is stamp duty value? 1 crore 20 lakhs. And how much is actual consideration? 1 crore. How much is 110% of actual consideration? 110% of actual consideration is 1 crore 10 lakh. Is 120 more than 110? Answer is yes. So both the conditions are getting satisfied. And hence what is the impact? That 20 lakh will be taxable in the hands of Dinesh. Dinesh have to pay tax for that 20 lakh under IFOS. Are you all with me? Twin condition in the case of inadequate consideration. What are the twin condition? Number one, difference amount have to be both more than 50,000 and the stamp duty value have to be more than 110% of actual consideration. If you are satisfying both, then the entire difference amount shall be taxable in the hands of the recipient in that respective year. Are you all with me? Are you all with me? Two things in relation to movable property. Number one, inadequate consideration. Number two, without consideration. In the case of without consideration, only one thing. Whether SDV of the property exceeds 50,000. If yes, fully taxable. For inadequate consideration, two things. First of all, the difference between the SDV and the actual consideration should be more than 50. Plus, SDV should be more than 110% of actual consideration. If both are getting satisfied, then the difference amount will be taxable in the hands of recipient. Now let me ask you one doubt. Say there are two stamp duty values. One on date of agreement and one on date of registration. Which one to take? You have to check whether you have received an advance, whether you have paid an advance because it is a recipient. the buyer, whether you have paid an advance. That too, the method of advance should be either account pay check or account pay bank draft or ACS or through prescribed electronic mode. In that case, you can take the date of agreements SDV. In all other case, you have to go with the date of registrations SDV. Are you with me? Are you with me? There are some things in online. This is irrespective of relative and others. Yes. What if I don't disclose that I got that gift? Then undisclosed income. Yes. Yes, Prem Kumar. That will be the impact. Someday over the other, they will come and pull your collar. That is VB. First you study about the compliance. Then think about the non-compliances and all. Okay. VV, first complete the compliance. First you learn a law. Okay. Then you will understand how to comply the law. Yes. Now, coming back to the point, we were discussing about the taxability of gifts, and we have completed money as well as immovable property. And there is one more thing. What is the third thing? You tell me. Movable property. What is movable property? What is movable property? Normally we say anything other than immovable property, but it is not like that. Normally that's what we say. Movable property means anything other than immovable property, but it is not like that. There is a definition. Can you read the definition? Movable property means, number one, shares and securities. Number two, jewelry, archaeological collection, drawings, paintings, sculptures, any work of art, bullion, VDA. VDA means virtual digital assets. Let's understand what exactly is this point. So listen, whatever shares and securities is always considered as a movable property. Jewelry. Then archaeological collection, you know what is archaeological collection. Alright. Then Tipu Sultan's dagger can be considered as an archaeological collection. Or Tipu Sultan's tiger, that already is dead. Okay. That tiger will already dead. Tipu Sultan's armor. Or tell me some other Rajas, Chola Rajas, Aditya Karigalan's dagger, okay, or Aditya Karigalan's, what do you say, sword, whatever it is, can be said to be what? Armor, can be said to be a archaeological collection. Are you all with me? So, drawings, paintings, you know what is drawings and paintings. Sculptures means what? Sculptures means, in Malayalam we say Kuttupani, I don't know what you call it in Tamil. Silai, some kind of silai we can say. Silais, yes. Then work of art, micro art and all. Work of art is a movable property. Then bullion. What is bullion? Gold coin, gold biscuit, etc. are considered as bullion. Then VDA means what? Virtual digital assets. Say for example, cryptocurrencies, NFTs, etc. are said to be virtual digital assets. Are you all with me? Now, Kalvettukkal. What is that? Sculptures. Okay. Yeah, Kalvettukkal. Yes. Electronic items and car are coming under this category, sir. You tell me, Ragul, whether there is electronic item or car coming under this category. No, that means I am gifting a Rolls Royce worth 1 crore rupees to you. Don't worry. First of all, I'm not going to gift, okay? Secondly, even if I am gifting, you don't have to worry about the income tax implication. Why? Because it is not considered as a movable property. It is a movable item, but according to the definition, it is not a movable property. Or I'm giving you a Rolex watch. I'm giving you a Rolex watch or a Rado watch. Don't worry. It is also not considered as a movable property. Or I'm giving you a computer, a laptop. Don't worry. It is also not considered as a movable property. I'm giving you a gold ring. Yes, it is a movable property. I'm giving you some shares. Movable property. Thank you for the watch. Okay. All right, very good. So, these are the definition for the movable property. And friends, listen, there are also two possibilities for the movable property. Number one, without consideration. And if the aggregate fair market value of such property, if exceeds how much? 50,000, then the whole of such amount is taxable. That simply means whenever you are receiving a movable property, the one thing that you have to check is what exactly is the aggregate value. Are you all listening? Whenever you are getting an movable property as a gift. Okay. So you need to check whether the aggregate fair market value of the property exceeds what? 50,000. If the aggregate fair market value of the property exceeds 50, then that entire value shall be fully taxable. Received Rolls-Royce car as a gift. Okay, not taxable. That's what I've said already, Ragul. Gold watch means jewelry. Okay, you have always checked the predominant element. Gold watch is considered as a jewelry only, not watch. Not except. These are the movable properties. It's not an exception. Movable property means this is movable property. Except this, nothing shall be taxable. Yes, watch is not a movable property according to the definition. So if I am giving you a watch as a gift, you don't have to pay any taxes. Come again? Rolls-Royce is also not taxable because that is not coming under the definition. Okay. Gold car depends. If that gold have more value, then it is considered as a jewelry only. Okay. Yes. Not exactly same, but similar. Yes. It's actually similar. You don't have to pay taxes. You got a gold ring and the value of the gold ring is say 10,000. You wouldn't have to pay any taxes. Wait, let me complete this. That is the next thing that we are about to discuss. Okay. Yes. So listen. Shh. Whenever I am receiving a movable property without consideration and the aggregate fair market value of such property exceeds how much? 50,000. Then department say nothing shall be taxable. Are you all with me? It does not exceed 50,000. Okay. Does not exceed 50,000. Then nothing shall be taxable. Now listen. We'll continue our example. Please don't talk in between. Why today everybody is talking in between? Please don't talk in between. If you want to talk, go out and talk, finish that and come back. Okay. Yes. So listen. Say for example, our example Dinesh. Say Dinesh got some gold ring. Gold ring having a value of say 30,000. And he got some, gold biscuit. Not gold biscuit. Say he got some shares. Having a fair market value of say 40,000. So Dinesh in 23-24 got two set of gifts. Number one, gold ring. And what is the value of the gold ring? 30,000. Number two, shares. And you tell me what is the value of the shares? 40,000. So what is the total value of movable property received by Dinesh? 70,000. That is exceeding 50 and fully taxable. Because here also they are using the word aggregate. If you are receiving movable property, then you have to always check the fair market value in aggregate. If that aggregate value exceeds 50,000, that entire receipt shall be fully taxable. Are you all with me? Moving on to the next one. What is the next one? For inadequate consideration. And the difference between the fair market value and the actual consideration, if exceeds 50,000, then such an amount shall be taxable again. What is movable property for inadequate consideration? What is movable property for inadequate consideration? Say, Dinesh received a necklace having a value of 10 lakhs. Dinesh received a necklace having a value of how much? 10 lakhs. Dinesh paid 1 lakh. Dinesh paid what? 1 lakh. What is the benefit receipt? 9 lakh. You only need to check whether the difference amount exceeds 50,000. If yes, that and the entire 9 lakh shall be taxable in the hands of recipient. Are you with me? If you are receiving a movable property for inadequate consideration, then always check what? Always check what? Whether the difference between the fair market value and the actual consideration exceeds 50,000. If yes, it shall be fully taxable. If no, don't worry about any taxation. Are you all here? Are you all here? Now, there are certain few points. So we will summarize this particular point. Then Ambani would have made super profit in wedding happening. Okay, gold watch comes under what category? Gold watch comes under jewelry only. Sir, is there any way in doing sums on immobile property for inadequate consideration, taking difference of 10% on consideration or 50? Yes. There is an institute admittal question. Okay. If a car is gifted without consideration, it is not taxed in the hands of transferee. No. Will it be taxed in the hands of the transferor? Why? Because it is a expense for you. You are not getting any benefit. Then why should we tax it in the hands of transferor? Mobile property check-in per or check-in per aggregate. Okay. Yeah. In movable property received inadequate consideration, it is also aggregate. Movable property, yes, everything is aggregate. Only immobile property is per property. Array, everything is full. It's threshold VV. Okay, everything is full. It's threshold only. Yes. So moving on with the next one, exceptions to 56 subsection 2 clause 10. Before that, let's summarize 56 subsection 2 clause 10. What's the summary of 56 subsection 2 clause 10? Listen. 3 things. What are the 3 things? Number 1, any sum of money without consideration, aggregate value exceeding 50,000 shall be fully taxable in the hands of recipient. If exceeds 50, fully taxable. Does not exceed 50, nothing taxable. Are you with me? Number 2, immovable property being land or building or both. 2 possibilities are there for immovable property, either without consideration or for inadequate consideration. If without consideration, then what you should do? Check whether the difference between, without consideration, then you need to check only one thing, whether the stamp duty value exceeds 50,000. If yes, fully taxable. Full stamp duty value shall be taxable. In the case of inadequate consideration, you check 2 things. Which are the 2 things? Difference between actual consideration and stamp duty value exceeds 50,000 plus stamp duty value should be more than 110% of actual consideration. If both are getting satisfied, that is per property. If both are getting satisfied, then difference shall be taxable under IFOS in the hands of recipient. When it comes to the movable property, and what is movable property? Shares, security, jewelry, archaeological collections, sculptures, drawings, paintings, work of art, bullion, virtual, digital assets. If these assets are received for without any consideration, check whether the aggregate value in a year exceeds 50,000. If exceeding, fully taxable. If difference amount, that means in the case of an inadequate consideration case, you check whether the difference amount exceeds how much? 50,000. If the difference amount exceeds 50,000, that difference shall be fully taxable. Are you with me? Is that clear? Great. Moving on to the exceptions, friends. I have selected only few exceptions here. Actually, the exceptions is very long list. I have selected only few important items over here. Exceptions to 56 subsection 2 clause 10. What do you mean by exception? Exactly. Even if you get a gift from the following persons, nothing shall be taxable under 56 subsection 2 clause number 10. Are you with me? In the following circumstances, 56 subsection 2 clause number 10 is not applicable. Let's understand what exactly is that particular point. So, listen, what is the first one? However, any sum of money or value of property. Property means both immovable and movable. Received in the following circumstances would be outside the ambit of 56 subsection 2 clause 10. What is outside the ambit? It is not subjected to taxation under 56 subsection 2 clause number 10. What is number 1? Gift from any relative. What do you mean by relative? There's a definition for that. If Dinesh is receiving some gifts from his relatives, Dinesh is not supposed to pay any taxes under IFOS. Who all are Dinesh's relative? Dinesh, if he is an individual, then read. Number 1, spouse of Dinesh. That means Dinesh's wife. Then brother or sister of individual. Dinesh's brother and sister. Brother or sister of spouse of individual. That means Dinesh's wife's brothers and sisters. Then brother and sister of either parents of the individual. That means Dinesh's uncles, like father's brothers and sisters or mother's brothers and sisters. Then next one, lineal ascendant. That means Dinesh's father, grandfather. Descendant, Dinesh's son, grandson. Any lineal ascendant or descendant of the spouse. Spouse, ascendant or descendant means Dinesh's wife's, that means father-in-law, then grandfather-in-law, mother-in-law, grandmother-in-law. Everything is considered as relatives. And what is the descendant of the spouse? Not necessary. Say for example, in second marriage and all, Dinesh's spouse already have a child, already have children, no problem. That also will come under the relative definition. Are you with me? You cannot always say same. Yeah, second marriage, there is a possibility. So that also is covered in the day. Surya, enakku theriyu why you are laughing. Okay, don't add any Ali, you have a lot of doubt. Okay, if it is a legal marriage, yes, possible. If it is a legal marriage, possible, yes. Everything. Come again? Yes, if it is legally adopted, possible, yes. I'll get, what is the HD TV here? It is LGBTQ, okay. LGBTQ is also there, yeah. First you go understand what is that, okay. Then you ask doubts. Now, listen, what is the last one? Go Jimma. Hey, stop, enough. So, keep quiet and listen. Spouse of any of the persons referred to B to F above. What do you mean by spouse of any of the persons from B to F? That simply means, say for example, say your brother is your relative, right? Brother's spouse is also a relative. Your sister is your relative. Sister's spouse is also a relative. Are you with me? Are you with me? Yes. Again, rainbow. Enough. Linear ascendant or descendant, can you please explain? Ascendant means father, grandfather. Descendant means son, grandson, daughter, granddaughter. That's it. Now, moving on. Relative for a HUF means any member. For a HUF, relative means what? Any member. For a HUF, if the person who receives gift is HUF, then all the members of HUFs are considered as relatives only. Are you with me? Are you with me? Now to the interesting factor. Listen. Listen. Say for example, say Mr. A, keep quiet and listen. Mr. A is gifting something in 2020-21 to Mr. B. They are friends, okay? They are friends and Mr. A gifted a building to Mr. B. And the stamp duty value of building is say 20 lakhs. The stamp duty value of the building is how much, friends? 20 lakhs. Are you all with me? Are you all with me? Now, if Mr. B is receiving this building having a stamp duty value of 20 lakhs, you tell me what is the treatment? What will happen to Mr. B? If Mr. B is getting this building without any consideration, that is what is called as gift. Okay, without any consideration, Mr. B is getting this building from Mr. A. You tell me, what is the income tax implication of Mr. B when he receives that particular building? What will happen? It will be fully taxable. Under which head? IFO. Yes, they are not relative, they are friends. I have clearly written friends. Ragul, idu paddi modalle. Okay, adukapra kelu. Now, Mr. B and Mr. A, they are friends and Mr. B is getting a gift of and having a stamp duty value of 20 lakh. So, you tell me, this 20 lakh will be fully taxable in the hands of Mr. B under IFOS. Are you all with me? Thereafter, Mr. B sold this building in 2023-24. Thereafter, Mr. B sold the building in the year 23-24. And you tell me, he sold this building for 50 lakhs. He sold this particular building for what value? 50 lakhs. Now you need to compute the capital gain in the hands of Mr. B. How much will be the full value consideration? 50 lakhs. How about the cost of acquisition? Here, don't take the cost of acquisition of the predecessor. Are you with me? If you are receiving a gift and that gift is taxable in the hands of recipient under IFOS, then the value that have been considered for the purpose of IFOS shall be the cost of acquisition on its subsequent transfer. Are you with me? So here Mr. B received an asset having a value, stamp duty value of 20 lakhs in 2020-21, and on its subsequent transfer, the cost of acquisition for Mr. B will be how much? 20 lakhs, and you can claim indexation from 2020-21 onwards till 23-24. Are you with me? Are you with me? Period of holding will be from 2021 to 22, 23, 24. Indexation is also from 2021 to 23, 24. What if Mr. A and B are brothers? Then not taxable under IFOS. Then preceding honors, cost of acquisition you can consider. Preceding honors, period of holding you can consider. And indexation also, preceding honors you can consider, provided you got Manjula J. Shah. Are you with me? Are you with me? If a gift is taxable in the hands of recipient, on that gift's subsequent transfer, cost of acquisition shall be the amount that is already taxed under IFOS. This is what the department say. Are you all with me? Is that point clear for you? Now can you read that note? This is that note. Can you read this? If gift is taxable as above, then its cost of acquisition on its subsequent transfer shall be fair market value or stamp duty value or amount taxable under 56 subsection 2 clause 10. Ignore previous owner's period of holding and indexation is such situations. That means at the time of receipt, if it is subjected to tax under 56 subsection 2 clause 10, then you have to take that value that is considered under 56 subsection 2 clause 10 as the cost of acquisition on its subsequent transfer. Are you all here? Are you all here? Now let's solve a small question in relation to this. So, please take question number 14 and give me the answer. Yeah. Inadequate consideration means you have paid something already. Plus the difference also will be considered as cost of acquisition. You're talking about taxability. Ask me again. Okay, once. So friends, please solve this question number 14. I think it's a past exam question. Yes, it's May 2022 8 mark. It's May 2022 8 mark. So please go through this question and give me the answer. May 2022 8 mark question. See, Shashi, you will get indexation. It's not like that. See, if that gift is taxable under IFOS, then you can claim indexation only from the year of receipt of gift till your transfer. Got it? You cannot take the preceding honors period of holding for the purpose of indexation. That's what I said. Now, if amount did not show under IFOS means we can take the cost of preceding honor. Yes. If a receipt is not taxable under IFOS, then you can take the cost of acquisition of your previous honor as the cost. Yes. Indexation when to calculate, sir, in prefix or received person. Indexation always have to be calculated by the transferor, okay? If the amount did not show under IFOS, okay, got it. Indexation always have to be calculated by the transferor. What is this prefix? This is actually a mix of capital gain and IFOS. Normally they will ask like that only. They will never give a question from IFOS because most of the students will study IFOS. They'll mix up something with the capital gains also. Yeah. Yes. It's not taxable under IFOS. And the gift is not taxable under IFOS. Just leave it on cost, leave it on by putting manual. Indexation is act as IFOS. Let me ask you one doubt. Let me ask you one doubt. Okay. I don't know whether this is applicable while solving this question or not. That you decide. I am a jeweler. I am a jeweler. I bought some jewelry. The market price of jewelry is say 1 lakh. The market price of some gold ring is say 1 lakh. I bought some jewelry for 80,000. I bought some jewelry for what? 80,000. I bought that gold ring for 80,000. Its market value is 1 lakh. Is that 20,000 taxable in my hands? I am a jeweler and I bought a gold ring having a market value of 1 lakh for 80,000. Okay, or for 20,000, say. The market value of the jewelry is 1 lakh and I bought it for 20,000. Is that difference amount of 80,000 taxable in my hands? Under IFOS? Answer is no. Why? Because jewelry is my stock in trade. That is what is called business. A trader will always buy something for a value which is lesser than the market value and he will sell it for the market value. And that profit is taxable under PGBP, not under IFOS. You got it? Yes. Buying stock in trade for a lesser value will never subjected to any tax under IFOS, okay? You're buying some stock in trade for a value which is lesser than the fair market value, that will never be taxable under IFOS. Ready with the answer? How many of you have an answer? Please raise your hands. Only 1, 2, 3, 4. Please complete. It's not that tough. All right, friends. So we'll do one thing. Shh. Let's not waste much time, okay? Let's do it together. So whether you have an answer, I'm getting good answers from online. Yeah, all right, very good. Since car is not movable property, not taxable, very good, very good. I'm getting detailed answers also. Excellent, very good, friends, very good. So listen. Shh. Now keep quiet. Now let's solve the answer together, friends. Keep quiet and listen. So what are they saying? Mr. Lilith, a dealer in shares and securities. You have to be careful with that particular word, okay? So Mr. Lilith is actually a dealer in shares and security. He has entered into the transactions during the previous year 23-24. Received a motor car 5 lakh as gift from his friend. Sunil on the occasion of marriage anniversary. And one more thing is there. Listen. See, I think we have explained only one thing under exception. Okay. See, gift from relatives. There are 2 more items. Number 1, on occasion of marriage. If you are getting a gift on occasion of marriage, that also is fully exempted. You don't need to pay any taxes under IFOS. Or if it is under a will or inheritance. So 3 circumstances are there under the exception. Number 1, from relatives or from friends or any other person on account of your marriage. Number 3, under a will or inheritance. Like that, you are getting any asset without consideration. Don't even worry about paying tax under IFOS. Are you all with me? Because we have completed the related definition, then we have moved on accordingly. Okay, I forgot to come back and explain those 2 other provisions. So listen. So here it is marriage anniversary, but no problem. It is not a taxable gift. Why it is not a taxable gift? Motor car. Motor car, is it a taxable gift? Is it a taxable gift? No. So we can straight away write motor car, not taxable, because it is not considered as movable property. Not movable property. So this is for Mr. Lilith, right? His name is Mr. Lilith. Now, what is number 2? Cash gift of 21,000 each from 4 friends. So he got some cash gift. And how much is the cash gift? 21,000 each from 4 friends. So you tell me how much is the total money received? 21,000 into 4. That will be 84,000 is the total money received. You tell me whether it is taxable or not taxable. Of course taxable, because in the case of money it is aggregate. Are you with me? Not from 1 to 1. All together, if your receipt in a year exceeds 50, you have to pay taxes. So here, that 21,000 into 4, cash, without consideration. 84,000 shall be fully taxable. Are you all with me? Then what is next? He got a land. Keep quiet. Keep quiet. He got a land at Jaipur on 1st July 23 as a gift from his friend Kabra. The stamp duty value of the land is 6 lakh and on the date, and the land was acquired by Kabra in the previous year 2001-2 for 2 lakhs. So he received a land at Jaipur. It is actually gift from his friend. So you tell me whether it is taxable or exception. Taxable only. What is the stamp duty value of the land? Stamp duty value of that particular land is 6 lakhs. So we can write land SDV more than 50k. So fully taxable. So the value is 6 lakhs. Then what is next? Then next item what they are saying is, listen, Mr. Lilith purchased from his friend Mr. Abhishek, who is also a dealer in shares, 1,000 shares of ABC Limited at 400 each on 19th June 2023. The fair market value of which was 600 each on that date. Mr. Lilith sold these shares in the course of his business on 23rd June 2023. Are you all with me? And what is the final requirement? The value of cost inflation. Mr. Lilith chargeable under, compute the income of Mr. Lilith chargeable under IFOS and capital gains. They are not asking us to compute the PGBP income, but still let's compute the PGBP income as well. So here Mr. Lilith is actually dealer in shares. He purchased what? How many shares? 1,000 shares. For what value? 400 each. What is the market value? 600. So you tell me whether that difference 200 is taxable under IFOS? No. Because since he is a dealer in shares, the taxability will come under PGBP. So you have to treat it under PGBP. Market value is 600 minus purchase cost 400 into how many shares? 1,000 shares. So can you tell me the amount? 2 lakhs will come under PGBP, not under IFOS. Because he is a dealer in shares. Moving on. What is next? He received a shop building for fair market value 1,50,000. Oh, there is something I've missed. Okay, in between there is another paragraph. Further on, 1st November 2023, Mr. Lalit took possession of his residential house, booked by him 2 years back. What do you mean by booked by him? It's a kind of an agreement. Agreement you have made 2 years back. At what value? 20 lakhs. The stamp duty value of the property as on 1st November 23 was 32. And on the date of booking, it was 24. He paid 1 lakh by account pay check as down payment on the date of booking. So you tell me what is the actual consideration? What is the actual consideration? Further on 1st November, Lilith took possession of residential house booked by him 2 years back at 20. So the actual consideration is only 20. It is not 20 plus 1, 21. Out of 20, you are paid an advance of 1 lakh. Because they say booked at 20 means the total value is 20. Are you with me? So actual consideration is 20. It's a building. And actual consideration is 20 lakh. And there are 2 stamp duty values. Out of these 2, which one you have to select? You have to check whether date of agreement you have received a advance. You tell me whether there is an advance. Yes. That too by account pay check. So date of booking, you can take that particular SDV, that is 24 lakhs. So SDV shall be 24 lakhs. How much is the difference amount? Difference amount is 4 lakh. And this difference amount is more than 50,000. And one more condition is there. What is that condition? Stamp duty value have to be more than 110% of actual consideration. How much is actual consideration? 20 lakh into 110%, and that will be 22 lakh. And your SDV is 24 lakh. So we can say it is more than 110% of actual consideration. So this 4 lakh shall be fully taxable under IFOS. Are you all with me? Because this is the case of inadequate consideration. Moving on with the next one. What is next? He received a shop building of fair market value 1,50,000, cash 50,000 in distribution from ABC Limited at the time of liquidation process of the company in proportion of his share capital. The balance in general reserve of the company attributable to share capital is 1,25,000. So this is actually something related to deemed dividend. That we haven't covered, that I'll explain right now. Are you all with me? This is actually something related to deemed dividend under section 222C. Let's understand what exactly is this. Listen, imagine a case. Listen, I'll explain the deemed dividend first of all. Deemed dividend under section 222C. Are you all listening? Are you all listening? Imagine, say I am a company, A.B.C. Limited. Say I am a company, and what's my company's name? A.B.C. Limited. Are you all with me? This company having general reserve, or this company having accumulated profit. What is accumulated profit? What do you mean by accumulated profit? Having reserves which is not yet distributed as dividend. Say there is a company having accumulated profit. That means that company have what? Reserves. That reserves are not yet distributed as what? Dividend. Are you with me? Are you with me? So this company have a reserves of say 10 lakh. This company have a reserves of how much, friends? 10 lakh. Are you all listening? Are you all listening? Say there is a shareholder, Mr. A. Mr. A is one of the shareholder, and this company is liquidated. This company is getting liquidated. At the time of liquidation, Mr. A got 15 lakhs. Mr. A got what? 15 lakhs. Say there is only one shareholder in that particular company. To make that example simple, my assumption is there is only one shareholder in the company. Are you all with me? At the time of liquidation, Mr. A got how much? 15 lakh rupees from the company. Now you tell me, imagine just before the date of liquidation, the company declared dividend. Imagine just before the date of liquidation, the company, if they have declared dividend, then Mr. A would have got 10 lakh rupees as dividend. Yes or no? What is dividend? Distribution of reserves is said to be, or distribution of your accumulated profit is said to be what? Dividend. Imagine the company, if just the day before liquidation, if they are declaring all the profits as dividend, Mr. A would have received 10 lakh as dividend. Our assumption is Mr. A is only shareholder in that particular company. Are you all with me? Are you all listening? So Mr. A would have received 10 lakh as dividend. But right now, there is no dividend distribution. The company simply liquidated and paid him 15 lakh. So if it is so, then what department say? Out of this 15, 10 lakh shall be deemed to be dividend. 10 lakh shall be deemed to be dividend, because out of this 15, Mr. A will receive 10 lakhs for the surplus balance in the company. The rest 5 lakhs is for his share capital in that particular company. Are you with me? Out of this 15 lakh, 10 lakh will be deemed to be dividend, and 5 lakh shall be treated as repayment of capital. Are you all with me? So deemed dividend under 222C means if you are a company having accumulated profit, at the time of liquidation, you are distributing any money to the shareholder. Out of that distribution, up to the value of accumulated profit out of that distribution shall be deemed to be dividend. Repeat again. Up to the value of accumulated profit shall be deemed to be dividend. Whenever you are distributing something at the time of liquidation, up to the value of accumulated profit shall be deemed to be dividend. Now can you read that particular adjustment and tell me what should be the treatment? Read just that adjustment and tell me what should be the treatment. He received a shop building of fair market value 1,50,000 and he received cash 50,000. So altogether he received 2 lakh. In distribution of ABC Private Limited at the time of liquidation process of the company in proportion of his share capital. The balance in the general reserve of the company attributable to his share is 1,25,000. Are you with me? So imagine there are two shareholders and the total reserves is 2,50,000. So he will receive 50% of that if the company would have declared dividend. But here the company haven't declared any dividend. Instead of that, they paid in total 2 lakh. So out of that 2 lakh, 1,25,000 shall be deemed to be dividend, and this dividend shall be taxable under IF. All the dividend, whether it is original dividend or deemed dividend, Taxable under IFRS. Are you with me? So what you need to do is we will write this here. Deemed dividend. Under section 222C. Company having accumulated profit if distributes any amount to shareholder, then up to the value of accumulated profit shall be deemed to be dividend. And out of this, you tell me how much is the value of accumulated profit out of this? 1,25,000 shall be deemed to be dividend because he got 1,50,000 plus 50,000 cash. His accumulated right in that particular company was 1,25,000. So out of the 2 lakh, 1,25,000 shall be deemed to be dividend. And what will happen to the rest 75,000? That is treated as a repayment of capital only. Are you with me? Are you with me? Yes. So what is next? On 1st March 2024, he sold plot of land at Jaipur for 8 lakhs. So there is something related to capital gain. When he sold on 1st March 2024. So you tell me, when he sold or he sells that particular land, what will be the full value consideration? Full value consideration, 8 lakh. How about the cost of acquisition? When is the purchase? He got the land in July 2023. And the cost have to be taken as what? 6 lakhs, because that is the value that which is taxable under IFRS in the year of receipt. It is not the predecessor's cost of acquisition. Have you seen in the examination? They have given 2 lakhs also. The predecessor's cost of acquisition is also given in the question with the index number from 2001, 2002 to 23, 24. If you don't study that note, what will happen? You will take the predecessor's cost and the indexation, because you will think that that's why they have given the predecessor's cost as well as the index numbers. Are you with me? Institute always plan like this, so that the students who don't have a complete idea over the topics, if they don't have a complete idea, they will make use of all these things to answer this. Are you all here? So you tell me how much should be the cost of acquisition? 6 only. And how much will be? It is short term capital gain 2 lakh. Then what is next? The value of cost inflation index is given. Compute the income of Mr. Lalit under IFRS and capital gain. So can you tell me how much is the income under IFRS total? How much is the total income under IFRS? 84 plus 6 plus 4 plus 125. 8 lakh 9,000. I don't believe you. Compute it to properly and tell me. 12 lakh 9,000. This is excluding capital gain, right? Only IFRS total you are saying. Okay. I think you guys have to change your calculator, okay? And how much is the short-term capital gain? 2 lakh. And how much is his total income? 14 lakh 9. You don't have to write total income because PGP also will come into the total income. Okay, don't write total income. But residential house point, was that a gift? What is the residential house? That is not a gift. Okay, that is not a gift. Company will never give you any gifts. This is on account of liquidation. That is repayment of capital, not gift. It's not for consideration. It's not without consideration. You have invested capital, that's why you have received that particular, value from the company. For me, I read from friends instead of 4 friends. I missed inadequate consideration, deemed dividend I missed. Don't worry, Ali. Because only now I told you about the deemed dividend. Okay, so it's perfectly fine. Sir, where we will tax remaining 75K on liquidation statement? For 75K, there are a lot of treatment. There is a section called 46. What has happened? Something happened. Hey, everything is stuck. This is also stuck. Online friends. Oh, okay, I think everything is stuck. Can you call someone? Like, everything is gone. Can you please call someone? Able to start cloud. Okay. Screen stuck. Everything is stuck here. Yeah, wait. I think it's working, right? Online friends, am I audible? Online. Yeah, okay. Great. Yes. So I hope you have completed that. Yes. So friends, we were discussing about IFOS. So we'll do one thing. We'll go for a break, okay? Because afternoon session, we will be completing 115 BAC and I'll be giving you 2 lengthy questions which have different adjustments from different heads. So right now you can go for a lunch break, go finish your lunch and come back at 2:15. Come at exactly at 2:15.